presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, Parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling a problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read generational thank you.
You are. Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Good afternoon, everyone. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. I usually do the 10 o'clock, well, I always do the 10 o'clock to 11 o'clock show, the Tiger Technicians Hour. And my other service here is my newsletter, The Opening Call. So with that said, let me just run through these numbers. The Dow's down 202 at 48,502. I've been talking about this for a little while now, and my subscribers know that what we've been doing is we're looking at this as a bifurcated market, that the oldies have now come alive, and they are the newies. I'll explain. And the newies, the ones that were doing just fantastically, are taking a breather. That's just the way I look at it. The other is that the generals cannot move ahead if the soldiers aren't following. So this is a move to the upside, very selective, Dow, but now you've got a broader move because you've got the IWM, the Russell 2000, the small caps. That's really important. Otherwise, it would just be a solo move. You've got backup now. So let me go through this. So in the Chapman methodology, let me just do this real quickly because this way you'll understand what I'm talking about. I try to identify the lowest low bar. I have technical tools that I use to do that. And then we count each successively higher peak. When you go to a peak A and then you cross it with a leg B, that means that you're probably going to upgrade from a buy signal to a buy mode. As soon as I say buy mode or the chart announces that it's in a buy mode, it means there should be at least 4 higher peaks. It can go to E, F, and G. It could go even higher, or you could have the sharpest move down from the D. Look at this D here at 48,431 on November the 12th. And look how sharply it came down. Then it started a new move up. Very soon after that, we added to our long position from April that we still got a little bit left after taking nice profits. And now we've added to that, and we're in a rather aggressive 3 times a small position, but a 3 times long position in the Dow again, the SDOW. Why? Because I can see the 9-period moving average, that little green line it turned green from pink. That's the 9 over the 14. The MACD had a beautiful move to the upside with a nice wide green over the red moving average. That was a good sign. The relative strength was good, not great, but good. But look at this, the stochastic going under 20% and then turning around. And look at that exact ictus at the bottom with the on-balance volume giving a beautiful turnaround. So this is leg C, and just if I stick to my rules, there should be a pullback to make a peak C. That's below today's high of 48,886. That'll make peak C, and then we should have a leg D. That's where you have to be careful. It could go higher, but that's where you could also get the biggest pullback. But look at this. There's a technique I developed a long time ago called the Chapman Wave Inside Track Repellent Zone. Not just one trend line that people like to draw. I drew 2 very close together. And look how often the price went right. This is the weekly chart of the day, how it went right into there, and then it turned around as it hit the green line. We just hit the green line today. So what's going to happen? We don't know. The 9-period moving average is really strongly over the 14. The MACD, this is the MACD right here, the moving average convergence, divergence, positive. Relative strength, positive. On balance volume, a little bit overbought. That's that blue line. And the stochastic is under 80%. I like it over 80%. So that's just another thing to say. All right, just be careful. Look at the monthly chart. I've got this as a brand new A. Remember my rule that I said if they're going to be a buy signal to a buy mode, it should go to 4 higher peaks. I just have to consider that this is a brand new leg A to the upside. Therefore, we should get a peak A. This is the Dow. That means you have to wait till February because the whole of January has to have a lower high than whatever the high is in December to make a peak, and then to go to another higher high. After that, you need one bar to make a new leg up. Otherwise, if there's 1 penny above December's high, it just continues leg A. So if that's the case, we get a peak A anytime. You still have to get a lower bar, that's a monthly bar, then a higher bar, that's a monthly bar, to go to B, and it goes on and on. So that takes you well into 2026. So that's the big picture. I'll be talking about that a lot in my webinar coming up on Tuesday. This is a webinar for subscribers to my opening call. If I can just find it right here. Where did I put it? There it is. So that is right here. So this is opening call subscriber webinar Tuesday, December the 16th, 4 o'clock to 5:30. In fact, every week on Friday afternoon, straight after the market, I do an hour to an hour and a half video overview, what we're looking at. This is going to be a little bit broader because I'm going to add some of the technicals. I'm going to add some of the things that I'm looking at in the big picture for 2026, what looks good going into the new year, where we are, review of some of the Chapman Wave technical tools, just some of them, because I do that in any case every week, plus when I do my daily updates, and sector rotation. That's what we're seeing here. Look at this. I've been waiting and waiting and waiting to see where on earth, if the cyclicals, the deep cyclicals, like Alcoa, look at this. Alcoa made a new recovery high today. We've been long for a little bit. This is Alcoa aluminum. If you're going to go to, look at General Motors, makes an all-time high as we're speaking. We're long General Motors, 81.14. What's going on here? Even Boeing, maybe it's short covering, whatever, but Boeing's acting not badly, not great, but not badly. Why isn't General Electric moving? Well, today's the day. We went from 279.64 yesterday to today's high of 304.01. Finally, maybe we're getting this aircraft engines, electric equipment, because they had a big order coming in. Maybe this is it. So this is the rotation. What's weakened? If you're looking at, let's just see what Amazon's doing right now. Amazon, Amazon's, it's not breaking down, but it's not really leading. Apple, it still needs to go higher, but it's not in this week. It's been kind of faltering. So what I'm looking at is a rotation that's going on. Let's continue. So where was I? S&P, let me go. S&P made a peak C today because it's pulling back, but it's under the previous high. So I've got to watch this very closely, because if next week the S&P, today's low is 6801.79. If it goes down to this area, the gap, this is that huge, remember that big gap on the 26th, was that just after Thanksgiving? So the low is 67.83. If it goes under 67.80 in the next week, that's going to be a problem. That's this whole rotation that we're looking at. If we're looking at the QQQ Index 100 trading right now sharply down 11.5, 614.11. Remember those famous stocks of the big move up? Iran, we still have some from 22. It went all the way to 76.87. We've taken a lot off. We've got a little bit left. And here it is at 41.30, down 2.64 today, making a lower low. And that's this whole rotation that we're looking at. I'll be back in a moment. We can continue. We want to look at different areas, different sectors, plus a couple of requests. Basil Chapman sitting for Tommy O'Brien. This is the Tom O'Brien Show on this Friday, the 12th. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
We're back and we're looking at a question about Harmony Gold. So let me do this first. So gold right now is trading down from the high of the day, but it's still up at it's at 43.30, up 17. It went all the way to 43.87. So I have a technique that I use. There's your peak D, that fourth highest peak, and look how we plummeted from 43.98 down to the low of 39. I don't always like to type this in because this is a continuous contract. This is not automated. I do every single notation by hand. So when it changes, all of a sudden you've got the letters in a different place. Now let me just put this in. On the 28th, it made a low of 39.37. It's the continuous contract, and then it went peak A, peak B, peak C, peak D. It broke this same channel we were looking at before, the declining inside track repellent zone. It took it out, and now it's done very nicely. My rule with the rectangle is it can have, if it comes straight down and it starts to make higher highs and higher lows, especially if it makes higher lows, then you can see a move towards the previous high, just under, right on, or just above, and then you got to be careful. So we are underneath the 4398 level of the 20th of October in gold, continuous contract. You can see if I did the rectangle right here in the weekly chart, it says you should get towards that high. So I wouldn't be surprised if we're ready for just a little bit of a dip next week. But I can see that it's going to tackle the 43.98 level as long as, look, the 9 is way over the 14. The MACD is good. Look at this. This is the relative strength index. Very nice. Stochastics is 78. I would have preferred 82%, but it's 78%. And the unbalanced volume is still rallying. It's not overbought. So this is still very good for gold. So just real quickly, GDX, a little different pattern. GDX has climbed. These are the miners. I love when the miners lead, because gold has been so strong that all of a sudden you get that momentum, that build-up of buying that goes into the gold stocks, and that's what it is. We still have our, this is the PHYS, this is the physical gold, which matches very much the GLD or the GDX chart. GDX chart is the minus. It matches the GLD. So in this particular instance, let me just put PHYS, and you see physical gold. It just broke today. It went to a higher high, and that means that this lettering here could very well be a peak, G/C. Don't get too excited about it. Also, you've got to be considering that it's a potential double top right now. All right? And in the monthly chart, it's gone to a D because it had an instant restart. Don't want to get into that. Tiger Technicians Hour asked the question, and I'll go through it. What is the Chapman Wave Instant Restart? So we're along from 20, and this is now at 32.91. We've taken nice little bits off all the way up, and then we've waited. We haven't done anything now, but we still have small core position. Again, peak E, got to be careful right here. So that's physical gold. So the question was Harmony. Harmony Gold, I believe I might have, it's a long time ago, but as a teenager, when I moved from this beautiful Sea Point, Cape Town, suburb of Cape Town, right on the coast, actually looks over Robben Island. That's when Mandela was prisoned, not when I was around, but afterwards. It's just a beautiful area. In the meantime, Harmony Gold on the reef near Johannesburg, I believe a lot that's where the mines were. I believe a mine was real near me where I used to go. I should remember the name, but I don't. Harmony Gold, South African gold miner. So it's done very nicely. It's gone to, there's no other way to count this but to call it, at least for now, a leg B to the upside, peak B in the monthly chart. That's still very positive. It hasn't double topped yet in the weekly chart, and the high that was made right here at 22.25 on the 16th of October. That was a peak E, and we pulled back very sharply to a trough D. Call them troughs on the way down with lower cases. It's gone now peak A, B, C. Then I did a left side, right side price time match to the bar, this peak right here. So it's already gone a little bit higher, but it says now I have to use a different candle. And the candle that we see this little dashed green line here, it's called the Chapman Wave Inside Wedge Target Repellent Line. It's green. On the way down, it's a dashed pink line, and that becomes a support target level. So this target says that by the, what date is that? By the 18th or 19th of December, there's a chance. Let me just finish this up. I'm going to go to this candle right here. Okay, right there. Okay, and let's just go click, and we change the colors, nice and easy. Make this, you see, because the higher up you go, the more you have to consider that your plumb line is changing. And this plumb line says, yep, there it is. By about the 19th, if it can make a higher high than today, 21.27, if it can go to 21.28 by Tuesday or so, it says, let me just check my calendar right here. Yeah, by Friday a week. By Friday a week, there's a chance we might tag that 22 level, the high. It's still very good. Really what you want to know is not how high it can go, but how low can it go. Right here, 19.60, I'm going to go just underneath there, and I'm going to say right there to 18.90. If there's any sharp pullback in gold, that's the area that you'd be looking at for Harmony, HMY, trading at 20.43. That's the support that I'd be looking at. I do 120-minute charts right now, but we don't have time. Next question came in. I have leg B in the monthly. Yes, you're correct. I also have leg B in the monthly, Mr. Oz. So that's very good. We coincide with that. That's the thing about the Chapman Wave methodology. Most of the time, you all agree with the notation. Every once in a while, there's something, maybe you've missed it. It isn't. Steve Rhodes has automated this to a very large extent. Does a great job. There are just subtleties that I find that I have to have. That's why I hand charted. The next question was Shopify. This is one that we followed for so long. I had it very briefly, got stopped out for a little bit of a gain, I think way back here, down at the bottom, and we never got back in, even though I loved it. Shopify Inc., customized online store platform. 176.29 was the high in November of 2021. Had a little bit of a problem. It went down to 23.63 October 22, and since then it's just made higher highs and mostly higher lows. Beautiful. And what did it do? It went to 182.69, tagged a double top, and now it's taking a little bit of a breather, and the 9 is over the 14. So this is what I'm saying, that there's been some very selective move. What was old is now new. So this was old in the sense that it had a beautiful run, and then for a good part from November coming down, it's had a good rally. Now, most important is not the upside, it's the downside. At 164, if there's a real serious sell-off anytime in the next week or two, this is what you have to look at. First of all, the support on this candle right here, that's the candle of the 8th. The support is at 156. Let's make it round numbers. 156. If it takes that out, the most important in December, going into the first week of January, will be 149, the low of the 1st of December. Upside, if at any point in the next, this is the 12th. Let's go through this coming Friday into the next Monday, Christmas week. If there's even a touch of 170, that's a really big positive for January. All right? Just make it as simple as possible. Overall, I still like it very much. Yeah, I'm upset. We missed. Many times I said we want to buy. We bought other things that have done even better. But this has done extremely well, going back to an all-time high from 23 to 182. That's very impressive. Question came in. That was Kate. That wasn't for me. Okay. Sorry, I didn't tag you. Can you look at an entry for WVE? WVE, I'll be there in a second. WVE is called... I'll be back. This is Wave something. I keep forgetting the name. Wave Life Sciences. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
So a question came in the Tiger YouTube from Michael. How high can HMY harmony go up? So that's a very difficult question to answer because the sky's the limit. If it gets a takeover offer or whatever it is, the question should be, where's the next big resistance that it has to take out so that you know exactly where the open sky is, where it can go to. However, I definitely can tell you, and this is 100% accurate, I can tell you how low it can go. It can go to zero. So that I know. All right, so the question, I'll go to it in a moment, but Wave Life Sciences Limited trading at 15.98, down 77 cents. That's almost a 5% pullback after just a most spectacular move from the sixes all the way to 21 something, 80, was it 21.73? Just 4 sessions ago. But look at the sharp move down. So the question is, where would you enter? So you see this, it's going to close in another 25 minutes or so. So this will be a weekly candle. This is an inverted green Chapman wave Roman candle. It's a very simple rule. If this wick, if it gets taken out in a shorter period, so this is a weekly, so let's call it a daily chart. If on a daily chart, there is a move to 18.66 that can hold halfway into the wick, the long wick. If it can hold for, I'm just going to be a little fussy here. I'm going to make it, normally I'd say for 90 minutes. I'm going to make it for a whole day. If it can, at any point during the day and then throughout the day, can hold above 18.50. There's a really good chance that it's going to very quickly test the 21 high that was made recently. But if whatever the close is today, if next week it actually starts to trade and then close underneath the low of today, the low of this week, and that's the gap up of 12.72, that's a really big issue. It's just a one-off spike, and it's the Eiffel Tower, I call it, straight up and straight down. Looks like an uppercase A. That's just the figuration. So at this particular point, 14.59 is the 9-period exponential moving average. So let's look at it again on Monday. What I would say to you is, as long as it's holding all of next week without taking out this low, that is really positive. The characteristic right now looks like a one-off, and it looks to me like that 14.60 key support that I'm talking about is going to be taken out Monday or Tuesday. Let's look at it again, but that's the idea. I would look at it. This is the area that I would probably nibble and start building a position if it can hold really nicely above 14.50, at least for a couple of days next week, the opening few sessions. That's what I meant to tell you. I knew that you would have that. Look what I did. You remember, I always have this. One of the techniques, a sub-technique in the Chapman methodology, is that if there's a little wiggle on the way up and you get two parallel highs, in this case, on the 24th of November, it hit 7.56. Well, on the 25th of November, it hit 7.56. But you see what happened? You see the relative strength had a little wiggle. You see that the on-balance volume had a wiggle. So to be cautious, I made that a phantom peak, and I'd make it red to say, hey, that's a technique I developed, and it's a specific technique. And it says that if you get to the top, rather than thinking, C, I'm waiting for the D, you already know that it's at a D, even though it's one that's made up. And that's the reason why a computer would have a terrible time. So look how it's pulled back. If you were a C waiting for a D, you'd have to wait for 16. You'd have to wait for 6 points. This way, you're already taking profits, which I know you already have, but this is what I'm saying. Wave, the news was real. Don't believe it. It's a one-off. Thanks, Basil. I thought it might be phantom once I noticed. Okay, yes. So that's the technique. And all it's saying is I'm already starting to, be very cautious. Now you know what to do. Now, let me go through a couple of things. So let me go back to this. I have a terrible time. I have a tough time actually telling publicly all the things that we've done for subscribers. But you have to do that. Otherwise, how on earth would anybody know what you do? I mean, I have a tough time because I think of it I don't have superstitions, but the one superstition I have is just that when you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. So I just don't like talking about these, but I have to talk about it. Otherwise, no one will know that Tuesday might be a good opportunity to see what's the rotation taking in. Why are we suddenly seeing General Electric going to the deep cyclicals like General Motors, Alcoa that we have, IWM, the Russell 2000, which is the small stocks, the small, and they're not very small if you look at the billions that they're small only relative to Tesla and Microsoft and Meta, etc. All right. So what I'm looking at here is, first of all, let me just put this up here so that you can see where it is if I can ever find it. There it is. So on Tuesday, the talk is going to be the outlook for 2026, which I already start this afternoon. We're already starting to put positions on. I'm not waiting for Tuesday to do it. Whenever I see an opportunity, today I did nothing. I say we're going to wait. We want to pull back because we want to add to certain positions, and I'll talk about that. And what looks good going into the new year, where we've had a rotation. And this rotation, the close today is going to be very important. Another 25 minutes is going to tell me whether there are has-beens that, like a Robin Hood, had a spectacular move, and we played it all the way up. Now it's pulling back 118 after being 153 was the major high. Pulls back, and we got back in. We added to our core position on the 16 level at 109. It ran all the way to 138, 140 actually, and now it's down to 118. I'm going to have to watch this. As I say, there's a rotation going on. Well, have a look at this. So I'm going to be doing a review of some of the technicals and the Chapman wave methodology, sector rotation, what's starting to look good, what's not. People have asked about Bitcoin. I'll show you why I've been very negative, even though we still have a position from much lower down in the IBIT, the iShares. But I've been very negative for over a month now, saying, it just doesn't look good. Trading around core positions. I like to do this. So we get a core position. That's the reason why we still have some left in GE, in Bitcoin, in Robinhood, and many. I ran the one that I spoke about earlier on from much lower down, even Microsoft. I like to take off on the way up, and then we can add on the way down. So this is very important. That's money management. Easy techniques that really help to hold a trend. Let me just go to this one right here. Here's one of the easiest techniques ever. So here we are. Let's just pull this up. And we're going to go to, it just happens to be, we don't have this. This is Palantir. Look, that green line is the 9-period moving average, and it's positive. So this is good. But look, here we are looking at, say, General Motors. Why are we long? Look at this, General Motors. General Motors went insolvent at some point, right? 2009. There it is. It's a brand new company at all-time high today, 80.75. Wow, is that not a turnaround? Yes, it is. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
So I had a question which I didn't answer, which was how high can HMY go? So I said, look at the next resistance. So the next resistance on the monthly chart is at so that is at 22.25. It's trading right now at 20.35, but it did at 21.27. If it breaks above 22 and it holds throughout December, if it doesn't go underneath 18, I can't remember what I said before, but I'm saying around about 18 to 17, all of December, but in fact holds very well, then the 23.5 to 25 area will be the next area of resistance. I'm not giving you a time. I'm just saying that would be the next area. And I would just have to put that into January. But I also want to see, because I'm getting some signs that are suggesting that even the golds are getting a little bit toppy right here. They've done fantastically. As I said, we have gold itself, still have a position in it. We have a silver stock, CDE, core mining. We got it in the 8, just under 8. It ran to 23.61. We took a little bits off, and then we didn't get back in. We've taken a little bits off, and we've kept this small core position because I think it's doing okay. But it took over a firm, and that's kind of really made it a laggard. So this is not one. But the question was, which one is one of the, well, Tom O'Brien started the Gold Report. Tommy's taken over, done a great job. And so I would just say, I like Newmont Mining. I think it's doing very, very well. ASA is the one that we don't have, but I've always followed it. Look at this all-time high as we speak. This is ASA is a Gold and Precious Metals Limited. Those are really good companies. But get the Gold Report, and then you'll know a lot more. But in the meantime, back at the ranch, these are fantastic companies, right? Okay, question came in. Let me just show you something quickly. This is the dollar. Dollar right now is trading down. So gold is up, dollar's down, but gold's starting to pull back, and yet the dollar can't get out of its own way. I would say why, and I would answer because in the first Trump administration, they kept saying we want a lower dollar because lower dollar is good for exports, imports. It's just the pricing is much better, and they're getting it this year. And that's the reason why I think that gold is just dollar's going nowhere. It's just down. It's stuck. That's the way I'm looking at that. So I wanted to mention the TBT went to a new high, a recovery high, that is. So this is the yields. But if you look at the yield at 3.52, 35.23, that's right there, and it's only in a leg C to the upside. That just says it could go a little higher, and I think that's what the market's also worried about besides the AI talk today that came out. So ultra short Lehman 20-year Treasury bond ETF. Look, it's just stuck in a range. I showed a chart the other day to subscribers. Or was it here? I think I did it. I did it in my show, the Target Conditions Hour, maybe yesterday or the day before, where I showed the chart that with the yields. We've been here many times before. These there's no reason to get all flustered about this. There are other things that are going on. The reason why we've got quite a bit of a spill off, but have a look at this. And one of the reasons why I said to subscribers, we are going to be very specific. We're going to move with the stocks that are telling us that they are participating on the upside, not the ones on the downside. And in that, look at this. As I say, General Motors, all-time high. This just says that the market is starting to, fund managers are looking at something different. They're looking at the bigger picture, the big cyclicals. That should all go well for the market for 2026. And if I love when we get a sideways trading range, because you've got something that's really good and something that's really bad, and it just evens it out. But you want to choose the ones that are working. I think it's working. Look, as I say, Alcoa, look at that. That's very nice action. Pulls back from the recovery high today. There's this inside track repellent zone. Look how it popped to the upside. And now look at this. The reason why I've been very nervous about Bitcoin is that when it made that peak D high at 127,750, look, here's your inside track repellent zone. Look how many times it went in, and that was the turnaround. Well, it turned around, and it came all the way down to test the 79,630 level of April, and the last low was 80,750. And look, a whole move to the upside going to a peak D. This tiny little rally, peak A, that's a little peak B, a little tiny C, a little D, and then it pulls. No, I want to see A, B, I want to see C, I want to see D, almost at all-time highs. No, this is not good. This just says maybe it's not going to break down, but it's really not participating on the upside. It's just stuck for now. So that's the way I'm looking at Bitcoin. And Ethereum had a really good rally on that. When was it? 4 days ago. And I said, yeah, peak D, be careful. It's going to pull back. Pulls back from the 200-period exponential moving average. How important is the 200-period moving average? Look at this. Here's the 1-minute chart of the E-mini. Where did it go to on that last rally? It pulled back. It hugged the 200-period moving average back at about 140 to, what time was that? Until almost 2 o'clock this Eastern time. Pulls back, goes back to tag it, couldn't make it. Now it's trying again. Maybe in this last 10, 15 minutes, it tags 68.35. But the market, what the market's telling me right now, there are specific stocks that are just, they can't get out of their own way. But have a look at this. Just have a look at this. This is, and as long as this continues, it's really bullish. This is the, oh, good grief. Just change that, sorry. Format. Let's go to XLF and the SPY. God, I always do that. There we go. Change that. SPY. Okay, good. Here we go. There. So look at this. This is the monthly chart of the XLF, the S&P Select Financial ETF. This is the SPY, the S&P 500 fund. And now what we're looking at is, look at almost every one of those highs and lows coincided. This is a monthly chart, and I've always said, yes, the semiconductors, where the semis go, the general market goes. But I spent years trying to find an overlap where I could get an exact correlation. This is it at this point. And look what happened. The XLF went to a higher all-time high. S&P went to an all-time high, but not quite where it was 2 months ago. So I'm watching this closely, but the fact that it broke out like this is so bullish. And as long as the financials hold really well, I think that's the reason why we've kept our core Bank of America, because it's just doing the job. It's doing the job very well. All right, so I don't want to run out of time because I needed to talk about a couple of questions that came in. Where did it go? Yeah, the IYT. I spoke about this the other day. So this is kind of Dow theory. I followed this for forever. I've been in the market only forever, right? And what's really important is I like the correlation that if the Dow goes to an all-time high, it's really great to see And now it's a different beast altogether, the financial, the transportation, because you've got within the transportation, you've got air, you've got shipping, you've got the trucking, you've got the rails. So it's much more complex than it used to be back in the day when they used to talk about Dow theory. But I love the fact that this is only in a leg B in the weekly daily chart for the transportation index. Leg D in the weekly chart with very, very good technicals. The stochastic could be at 80%, but it's only at 76%. And a leg C in the monthly chart. Isn't that good? I mean, that's telling you that the economy is, there are parts of the economy that are doing very well. There are other parts that are really lagging, and I'll talk about that when we return for the final segment. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. I'll be back in a moment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So let me just do this in the last couple of seconds. So the IYT, that's the transports, are still looking very good, very strong. If they were down together with the NASDAQ and the S&P was lagging much more, then I'd say, that's a problem. Right now, it's very selective, the moves up, but also the moves down. But it's broadening a little bit. And let me just explain. So I had a question earlier in the day in my show about Palantir. So yeah, Palantir is still looking good, but it isn't so strong that I can say, wow, this should just shoot to the all-time high in the 200s. So, but On the other hand, I really don't like to talk about this because, once again, this is where you take your hands off the wheel to pat yourself on the back. That's where you hit the tree. But I'm going to mention this. And the reason why I chose Rocket Lab as one of those that I really liked, and I followed it for a long time, never owned it, we've never had it, but we got it down at the 48 level, and today the high was 65. I mean, that's a really nice gain, and it's only a leg B. So if you're already interested in, signing up for my webinar coming out, try to do it as soon as possible rather than after Tuesday or on Tuesday when I do the webinar. Let me see if I can even get it right now. Whoops, where did it go? There it is. So, am I correct? No, I don't know where it went. Okay, so the webinar coming up on Tuesday. No, don't waste time. Just get it right there. Okay. Oh, there it is. Okay. The reason is you get the webinar. I think it's so timely. It took a lot of effort to try to negotiate from what was great and we got out of. We've got core positions from much lower down. That's fine. But we really started new positions. And those new positions have worked out very nicely. Even today, the portfolio is just doing way better than the overall market. So if you're interested, just you can even send a message to me, Basil Chapman, one word, at TFNN.com. I'll check it out and I'll answer you if you've got any questions about the webinar coming. I have to talk about it, I'm afraid, because it's coming up, and how else would you even know what I do? So with that said, check out my opening call daily newsletter, and I will see you. Have a wonderful weekend. See you on Monday, and we'll see how we close out.